everyone is doing all right.
Morning, Johnny. Morning, Axel. Morning, Gal. Morning, Franklin. Morning, Florian.
Morning.
Carson, can you hear me all right?
All right.
Hello, hello.
Can you hear me, Henny? Henny?
Can I get a thumbs up if my audio is coming through?
Yeah, I can hear you. Can you hear me?
I don't hear you, Carson. When you check your sound settings. Morning, Axel.
Henry, what about now?
Good to see everyone. Hope everyone's had a good weekend so far. A few minutes for folks to come in. We're just at 10 now, so.
Can you hear me, Henry?
Another 4 or 5 minutes.
Henry, can you hear me? Henry.
Can't hear Carson. Is my audio is coming through? Just not Carson's. Both audios are coming in, you just can't hear each other. Huh. Say something, Carson.
Can you hear me?
Weird. I can't hear you.
I'm gonna join from my personal then. It might be that. Let me see if that works. Hold on.
Why can't we hear each other?
Henry, can you hear me?
Settings. Oh wait, here we go. Say something now.
Can you hear me?
Yeah, I hear you now.
All right.
It was my end, I think. My output.
It was your output.
It's confusing because I went in the sound settings and
Alrighty.
all right.
As long as it wasn't me.
I'll take the blame.
All right, let me say my good mornings. Axel, Dal, Emmanuel, Florine, Franklin, Johnny Boy, Patty, Seren, Sufyan. You guys got similar names. We'll give it 2 or 3 more minutes before we get on. Hope everyone's had a good weekend so far. Max, good morning. I'll go ahead. Henry, you might have to give me the allowance to screen share, unless you want to do it. Doesn't matter.
Oh, yeah, I meant to add you as co-host here. Still getting used to some of the Google Meet stuff. We are recording. That's good. All right, there you go. You should be able to do it now.
Yeah.
All right, we'll go ahead and get started.
Alrighty. Screen shared?
Yep.
Alrighty. Good morning, everyone. Today is October 8th, Sunday, 10 a.m. Eastern Standard Time, where I am. Not sure where you are coming from, but good morning, good night, good afternoon, wherever you are. Pretty big week going into the markets. Last week we had our month open, NFP, all that good stuff. Can't wait to get into it. This week, no news on Monday. Tuesday, we have FOM and FOMC members speaking at 1 p.m. Other than that, pretty light day. Wednesday, Thursday are some pretty heavy days. Thursday more than Wednesday, but on Wednesday we have PPIs and core PPIs at 8:30. Excuse me. And then at 10:15 a.m., FOMC member Waller speaks again. And then at 2 o'clock, we have FOMC meeting minutes. So pretty occupied day there, both AM and PM session. FOMC meeting minutes is not as crazy as a regular FOMC, but it is that a pretty good injection of volatility in the PM session on Wednesday. Thursday is kind of the biggest day where the fireworks show is this week. We have core PPIs month on month, regular CPIs, core CPI month on month, regular CPI month on month, CPI year on year, and unemployment claims all being released at 8:30. Do not be in the market at 8:30 on Thursday. If you don't believe me, try it for yourself. You've heard me say this time and time and time again, but if you guys are new or whatever the reason, this is your first CPI. CPI is an instant redelivery of price. It does not matter whether you have a stop loss or take profit in there. It is a gamble. You want to gamble? Go ahead, go to a casino and trade CPI. Do not trade CPI if you actually want to try to learn and get a better gist of how you're supposed to behave with a mature mindset in the market. Don't do it. You can trade after, but as long as you don't have anything going into CPI, I've done it. I've traded CPIs. I've won CPIs. I've lost CPIs. And I came down to the conclusion that it is not worth the time, stress, and any work that you've built on an account or anything like that. It can go down like that, right? Even if it's the best looking setup in the world, still don't do it. Nothing else there on Thursday, but it is a big 8:30 a.m. on Thursday. Friday, we have another FOMC member speaking, and then we have consumer sentiment and inflation expectations an hour later. So it looks like for the most part, Wednesday, Thursday, Friday are the hefty parts of the week, especially that Thursday. Be careful in the AM session. And then, there's a reason why, if you guys are new here, the first thing we always go over is the economic calendar, right? These are things that you need to know and plan your trading week around the economic calendar, right? You know when you're supposed to be active, when you're not supposed to be active. This is going to set up your week as a trader. Any questions here? All good there? You can use Econ a day. You can use Forex Factory. There's several different websites. That's something that you can find in the community of what type of economic event calendars that people use. I use Forex Factory. Henry uses Econ a day. It's just up to preference, but it all correlates onto one thing. Do you know what days have what economic calendar events and what time are they being released, right? I don't just go in this week without looking at this and say, you know what, I'm gonna trade Tuesday, or I'm gonna trade Monday, or I'm gonna trade. That's not, you're throwing a dart at a dartboard. You need to understand when the economic calendar is being released, when things are coming into the market, and that can show you when you need to be present, right? I like to trade PPIs, but I'm definitely not trading CPIs. So I know right off the bat I can be active Wednesday and I can be active during the AM session. There's some volatility in the PM session too, so that both sides, AM, PM session on Wednesday, I can be active if I choose to. Thursday, AM session, at least for the first part, at 8:30, maybe 9:30 and onward, but before 9:30, that's nothing that I want to touch, right? That's nothing that even though there's volatility, that's the type of volatility I do not want to touch. That's the type of type of volatility that immature gambling traders use, not me. And then Friday, right? Everything's fine there. Most of the damage has been done via Thursday. So Friday obviously can present some good trading there as well. But just wanted to go ahead and get that under our belt. If you are new here and you weren't sure about economic calendars or anything like that. Other than that, I can get into the DXY. All right. Still getting used to this. Let me switch this over. Dollar. Alrighty. Dollar on the weekly. Basically, still coming off that high we made. A couple things to note, obviously. Talking about this weekly BISI was my main focus going into here. Seeing now, obviously, we had inverted it, came back and retested it. Seeing how we basically acted and behaved with regards to closure, weekly and daily, right? Weekly, very sensitive, right? We inverted that very nicely, respected the consequent encroachment in the lower half of this BISI right here, and we came lower, right? We were expecting a high to kind of form. We were very overextended. It is the first down closure candle we've had in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, right? 11 straight weeks of up closure. And I had preached in last week's call, it's not going to be 52 weeks of straight up closure, right? You're going to get down closure, and anticipating that and anticipating healthy corrections and retracements is good for your learning. It's not just, okay, we're going in this direction and we're just going to keep on going. That's not how the market books, right? You have to understand that things are going to get overextended, and you're going to have to start to figure out where it's going to potentially get overextended at. So we were looking at this BISI, and we came back down. My eye was obviously looking at potentially this monthly. So if you go into a monthly really quick, right? We've got this monthly BISI right here, or excuse me, SIBI. We've got a monthly SIBI, and I'm looking at this low right here, right? This monthly low, because I'm curious if we're going to go higher, we're going to want to overall respect that. So if you go back down on a weekly, areas in and around that level are a couple things, right? Well, we have this previous week's high, we have this previous week's low, but we just created a BISI based off of this week's closure, right? There's your BISI right there. And going into this week on a daily time frame, I'm curious to see how price reacts on both the consequent encroachment and SIBI monthly SIBI low, right? Notice how that's inside this BISI, right? Notice how we also have a high right here, right? So it's kind of like a 2022 model, right? This high led to structure being broken, right? You took sell side here, and there's a tiny bit of displacement here. So when I go on a daily now, right, there is a BISI down here that we could stretch to, but I'm not worried about that yet. I want to see how price plays where it's more current. Right? So when we go down in here, we were looking at this candle right here as an order block. We kind of gave through that, right? We pushed all the way back up on NFP. There was a BISI right here, or excuse me, a SIBI. You have a SIBI right here. Price pushed through and was sensitive to overall this BISI again, right, as inversion. So now it's a question of, do we hold this low, or do we want to retrace a little bit lower, right, and take out this previous week's low? To me, if I take the consequent encroachment of this wick, which would be viewed as a rejection block, that is almost the exact same as this SIBI low on the monthly inside that weekly BISI, right? And we also have a daily BISI right here, right? So there's a lot of area here where I'm going to be watching for daily closure in and around this 105,900, right? As long as price stays closed inside or above 105,900 or 105,800, I believe we can go higher. Now, if we start to not necessarily respect 105,900, 105,800, yes, there's some areas where we could kind of reach into, right? You've got order blocks right here. You have a volume imbalance right here that is only offered buy side. So if you go into here, right, there's a volume imbalance, right? And what's the key thing to note with volume imbalances? Candle body closure, right? And if you can notice, only one form of candle body has closed through it, right? It offered buy side, but it has not offered sell side. So if we start to slip up here, right, if these areas, right, if these areas 106 to 105, 107 start to fail, price could very easily come below it and start to reach into this previous week's low, right? This previous week's low, or it could want to offer a sell side candle in this area, right? But overall, I am still bullish on this, and it's if we offer displacement through this low, I will start to consider a potential deeper retracement. But I'm curious on whether or not if we even take this low, if it doesn't even offer clear displacement, I'm not going to worry too much about it, right? I'm still somewhat bullish on it. I would prefer us to just overall stay above this candle. But like I said, there's a BISI right here, right? So there's areas where price could go lower. But my focus is how we react here, right? Do we use it as it's supposed to be used? Do we come down and continue to go higher, right? Or do we break it and use it as inversion and go lower, right? That's something that I'm potentially looking at. But no structure has been broken. We haven't even taken this low yet. So until we take that low, I'm not going to consider anything to the downside yet. But I will say we have formed this swing point. And if there's something that's going to keep me in the vicinity of, okay, if price does pull up before going lower. Oops. I'm going to clear this up a little bit. Right? My main focus on if price does pull up higher is this candle right here. Right? This candle, to me, I'm going to treat as an order block. Right? So what I'm going to do is I'm going to take the mean threshold of that alongside the mean threshold of this rejection block. Right? This is my main area of concern this week for dollar. Right? This area right here. Right? That's my main area. Because if price pulls, taking the low or not, if price comes into here and pulls up into here, I want to see how we react. Right? Because we could, if we go lower, this is still up for grabs. Right? But really, what's going to get me back on the wagon of being extremely bullish again is if we can get over this. If we get over this, I want to see this used as support, and I want to see price go higher. Right? But if we can't get over this area, 106.7 and 106.6, price can, in the simplest terms, it can consolidate in between this low and this area, right? But if price is sensitive to this and it wants to go back down into here, right, you could potentially get some form of consolidation in here, right? And from there, it's seeing how price is engineering liquidity. So my main focus is where and how price responds in and around 106.1500 and 106.600. And then obviously the swing low in and around 105.600, right? So I'm understanding 106 flat to 105.800, seeing if we get a bounce or if we break through it. And if price does decide to go higher, if this is going to be an order block and it's going to be a potential bearish order block, price is going to have to be sensitive to the mean threshold of it, right? And if this is a rejection block, that's a premium array. If I take the consequent encroachment of it, price should be very sensitive to that too, right? So I'm curious to see how we play here. There has not been any displacement here, but if I go in on a 12-hour, same thing. No displacement, just a very long rejection block. If I go in on a 4-hour, not really any displacement here either, right? Nothing super clear. We did get this. This was NFP. Pushed all the way up, came all the way back down, right? And we still have this little BISI in here, right? So we could push deeper in here, and that's why I said look for this area. This is an area where I'm thinking that potentially if we form lows early in the week, right, Tuesday, Wednesday this week, right, we could form some form of swing point in here and continue to go higher. If we break this low right here, right? If we break this low right here, what does this become? I'm going to check the chat. What does this candle become? Or even this, we can even make this. What does this candle become? These two candles right here. More so this last one, but you can even use both of them. What does that become in the chat? Who knows? Someone type in the chat and let me know what that red candle would become. Anyone. Breaker, yes, thank you. Right, so that becomes a breaker block. So if we do decide to get below it, right, price has a high, a low, we take out the high. If we displace at this low, right, that could become a breaker, right? And I'm not wanting price to go higher than 106.6, right? And I'm going to want price to stay heavy-handed to the downside, right? That has not happened yet, but I'm identifying certain candles and I have a story that could play to it. And if so, I can start to follow it, right? So that's something that I'm going to want to start to look at, right? If we do take the low, where should my eyes go? Well, my eyes go then here, right? To identify this as a breaker. And I also have all of these discount levels on the daily, right? I have all of these discount levels on the daily, right? I have the SIBI low on the monthly. I have a previous week's high. I've got a daily BISI, and I've got a weekly BISI, right? All right here. And then when you go into a 4-hour, you've got a breaker that could potentially play to it too, right? So that's something that could line up if price decides to continue to deliver lower. That's not saying that I'm bearish, though. I am bullish, right? Because we haven't taken this low yet. Until this low is taken, I have no valid reason for me to sit here and respond in a bearish manner. I'm still bullish, right? I have to trade what I see, not what I think I see. I can think that it is going to go higher, lower, but what I see is that it hasn't even taken the low yet. So I'm still bullish on it, right? And even going into a 12-hour and a daily, right? I've got two areas. I've got on the daily, if we're going to go, I've got something to watch out here for, right? Being the 2nd of October's daily candle. And then I've got this 4-hour right here, right? If we stay above this high, or excuse me, if we stay above this low, we're going to continue delivering higher, right? Well, where would we deliver to? Well, we've mentioned it. Buy side is still at 108 right here, right? Buy side's still here. We still have an inefficiency on the daily here. So even though I'm still bullish and I'm expecting higher prices, I can now be very adaptive to the market and understand what could potentially happen if we aren't necessarily bullish, right? I'm protecting myself and my knowledge. So if for whatever reason this low gets taken, I'm not just lost, right? I know how to adapt. I know what to look for, and I can understand the next area in the market for behavior, right? We're going to want to expect if price takes this low, expect that to stay heavy to the downside. And where could we go? Well, we have that daily volume imbalance, right? We've got this daily volume imbalance, and there is insufficient price here. And there's another volume imbalance down here, right? Does anyone have any questions on dollar before I give it to Henry? All good there. Okay. Henry, you're good.
All right. Yeah. Okay. Yes. All right, so we've kind of moved off this low on the monthly chart. After pressing down into some of the sell side targets we talked about, we're looking at this old volume imbalance here on the monthly. And you see, we did get this closure below the monthly hissy here back in September. So it's fine and natural for us to trade back up into that area a little bit. Still generally bullish or bearish, excuse me, as we drop down into the weekly chart. Still looking for these lower sell side targets to trade. We have somewhat relative equal lows down here, and on the daily you can see down here as well. So still higher time frame looking for these sell side targets to trade. But given what we saw develop last week, I think there is a possibility that we could have a little bit of a higher retracement before trading down into these areas. So I will drop down in the daily chart and we can look at that. And you can just see the existing inefficiencies that remain on the weekly chart here as well. So we have this city up here, and then we traded down into this volume imbalance. You see just wicks through that, and then we'll have sell side down below here. Daily chart. So this is that inefficiency that we've really been trading in for the past week or so. This combines this daily BISI right here with this volume imbalance between these two candles and also this daily BISI right here. Just combine them all into one. Let's draw that out. Last week, we were talking about how we wanted to see the consequent encroachment of this wick hold, which we got there and then traded down into sell side. And now that this has been reached, on Friday's action, we had that return back up into the range into some of these premium arrays. I still would really like to see price hold down into this area if we're going to reach down here on a much more short-term basis. But I would allow for price to trade up into this inefficiency up here and still to trade lower. I'll go ahead and mark that up. Like that. So still looking for lower prices. Now we'll have sell side under this low, and we'll still have sell side remaining down here. You can see these relative equal lows here on the daily chart. And you could envision this sort of as a market maker sell model, right? This is your original consolidation up here. This would be your low risk buy, accumulation, reaccumulation, and then a smart money reversal up here. And then you're having your distribution on the way down, back toward these relative equal lows. So we could see a potential return back up into this inefficiency up here. I would prefer for price to stay under this order block, but if we do trade up in here, that would be permissible and it could still trade back lower. What I would not want to see is closure above this here. That would start to give me the concern that we could potentially reach back into some higher premium arrays up here. So there's a small inefficiency remaining here. We have buy side up here if we do get the closure above that. As for now, as long as we remain with body closure below this, I'm just going to be watching premium arrays for us to trade back down toward the sell side and lower targets down here. Part of what gives me the idea that we could potentially return into some of these higher premium arrays and why I would allow for this to trade is the fact that we dropped in so close to sell side right here. If you look on an hourly chart, you can see it. I think it might even be closer on NASDAQ. How close we dropped down into this lower target from Wednesday and did not show the willingness to continue lower into there. So as we break that higher, there's a possibility that you could reach into some of these buy side targets here, 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 and potentially reach up into this area. Note that this also aligns pretty closely with the consequent encroachment of that monthly BISI. So we can see that rally up into there as well.
Someone asked if there's any SMT there.
We can take a look.
And if you're new, guys, SMT is like a smart money technique. So when you have correlated assets such as S&P, NASDAQ, Dow, and dollar, you're looking to see if one of them makes either a lower low or a higher low, and that identifies either the stronger or weaker of the two.
There's no daily S&T as far as I saw, but you do have between 1 p.m. on Wednesday and 3, or oh no, this is from the previous week, isn't it? Let me look on the daily. This right one is NASDAQ and this left one is ES. So yeah, you do actually on the daily chart have it. So you can see right here how ES purged its low down there on NASDAQ, failed to do so. Got very close, but didn't show the willingness to quite get lower. And now we're returning up into some of these premium areas up here.
So in that case, NASDAQ had the unwillingness to deliver below that low, which means it's the stronger of the two pairs, right? They always go in the same direction, but if one takes a low and one fails to do so, that one that fails to do so is showing a underlying strength between all of the assets, which means if you're aiming for higher prices, NASDAQ will probably stretch a little farther.
Yep, that's a good thing to note there. Yeah, go ahead, Ismail.
Yeah, something like this, Carson and Henry, you don't look at it as like a strong SMT to the bullish side just because of how ICT been pointing out since the beginning of the year that NASDAQ was the leader to the upside. So ES is going to always show weakness on the downside. And if we're looking at it from like a bullish standpoint, we'd want to see SMT, but ES make the higher low, and that shows like a strength in the market.
I don't think you'd necessarily need to see that for a bullish bias. It would be fine for NASDAQ to remain the leader and be the one showing the bullish S&P, making the higher low versus ES making a lower low. I think that what's really important when you're looking at S&P is it's a divergence, but it has to align with your bias as well, right? Like there's countless times throughout intraday price action where you could see something that looks like an SMT, but if it's not in alignment with your bias and where you think price is going to reach to next, it is not necessarily going to help you identify future price action. Like if we're saying that this is still bearish on a higher time frame. If this just trades back lower down into the low, and then you have something like this where they're just both making lower lows, then it doesn't appear as an SMT anymore, right? So you have to make sure that you're aligning SMT with the higher time frame confluence as well. If we look at a weekly chart, I'm going to put this in. Then this isn't going to necessarily tell us that it's bullish right away. Right? You see a little bit more bullishness on NASDAQ, but there's still a large inefficiency remaining here that we can trade down into. And ES has shown a lot of weakness, just trading completely over that monthly BIST right here. So yes, we could see potential short-term bullishness. And we did see that the SMT with NASDAQ making a higher low, so you could expect NASDAQ to potentially retrace a bit higher than ES has, which we've seen throughout a lot of this action, right? Like deeper retracements on NASDAQ. If you look in these past days here, while ES was respecting a lot of these premium arrays and continuing to drop down toward the sell side, NASDAQ was having these heavy retracements and not respecting this order block right here, this Monday, September 25th. It's the same one as this one here on ES. So you can see the nice respect for the consequent encroachment of the wick right there, and then the body of the order block trade moving across right here, tapping it right there. And you're not seeing that same sort of respect on NASDAQ. You're having these deeper retracements, and then we have the bullish SMT right here, so you could potentially trade up into some of these premium arrays. But sometimes an SMT is just enough for you to see after trading into sell side and then getting an SMT, that's enough to think, okay, we could potentially push a little bit higher up into this range, but it shouldn't immediately make you jump to, I'm switching my long-term bias, right? You need more than just an SMT occurring to show you that this could potentially trade much higher, or make a higher high going into the later part of the year. So that's why we talk about looking at some of these premium areas, like here on NASDAQ. You can see we're already reaching up into this city right here. That would be fine for it to trade higher up into here. We just wouldn't really want to see closure above this and then starting to invert it and use it to trade back higher. But it's totally fine to trade up into some premium arrays and then return back lower. Does that speak to what you're saying? I answered it.
Yeah, I was also pointing out if we would see a higher low in ES, that would really show bullish signs for like a higher time frame.
I think
because it's the one leading the weakness to the downside.
It could help you see a bit of that. Still though, I think the most important thing is that you have that confluence of the higher time frame bias as well. And just looking at a weekly and a monthly chart, I don't think we're really given that yet.
I'll also note too with what you're saying, Ismail, with regards to directional long-term bias, I think SMT is really good in identifying what you're saying if it's actually occurring in dollar too, right? So if you're getting that switch and that divergence in dollar, that then could signal for what you're talking about, right? If dollar's been going higher and ES has been going lower, and you get that SMT divergence between that and also into NASDAQ and Dow and all that other stuff, then that can start to signal what you're talking about. And that's a good way of outlining a potential assumption of a reversal when you're identifying it in dollar.
That's true. Yeah, that can help you get that extra confluence as well.
Anything
go ahead.
else? I was just gonna say anything else for ES.
I think that's it for ES here, unless anyone has any questions on these charts.
I've got a lot of trades to go through. I've got a lot of good stuff.
Feel free to come off mute or put something in the chat if you have a question.
Yeah, if you guys got any other questions respective to this week's price action on ES or NASDAQ, feel free to holla. If not, we'll go over some trades.
All right. Sure.
Alrighty. I'll go over my trades first. And going into this week, guys, I'm going to start posting my trades into the forum. I know I haven't been, but I also wanted to go over the week followings because we didn't because of the launch party and I didn't get to go over it. And it's too complicated for me to write it up because of what happened. But I'm going to go ahead and get into it and show you guys, and so I can talk to you guys about it. Tell me when I'm sharing screen, Henry.
Good.
Okay, so this was 2 weeks ago, right? This was the assignment that happened 2 weeks ago. So this occurred on Wednesday, September 27th. So it wasn't last week, but the week following. And there's a couple things that I wanted to note going into this because there was errors on my side, and it's something that will probably happen to you eventually. And this was all my fault going into it because of I was rushing, I was trading at work, and I've constantly got things coming in and out of my office. And if I'm not fully, this is just to show you guys, if you guys aren't fully focused, errors can occur. So going into equities open, basically we had ran 730 highs, buy side liquidity, but I'm also noting the closure, right? Notice how when we ran that, right? When we ran that, right? That's going to be like your turtle soup. Price ran it, but we had no closure above this high. We pushed lower, and then basically in and around 9:30, right, we started to displace, right? So we had market structure shift here, right? Market structure shift here, and we kind of displaced in and around here, right? And we can see that we had a clear SIBI in here. And then also using this as an order block, I was identifying the consequent encroachment of it. Now, this was a setup where I had a very small window of a stop loss. So I was trading with a very thin stop loss. I was still risking what I was supposed to risk, but I had a lot more contracts on, right? And when you're trading with a lot more contracts, you're a lot more susceptible to errors. And what do I mean by errors? It might not be something that you're reading in price, but it might just be fundamental execution errors. So my idea was when price pushed back up into this SIBI, right? We had this overall order block, and then we also had an order block right here, right? That up close candle right there. So we had these two mean thresholds, this big order block and then the smaller order block. But overall, my stop originally was right here, right? And I was looking to see how price reacted and how sensitive it was in this area of the SIBI, right? So price comes in, and as price is coming in, I entered in, and I basically came, as price was pulling all the way back down, I entered in with 7 contracts on this lower half, right? 7 contracts with my stop above the consequent or mean threshold of this order block, and it's on the top half of this SIBI, right? So I had 7 contracts right there. Now, where I messed up was I was rushing, and I immediately went to go put in buy limits, right? So I'm selling at 7 contracts with like a tick of a stop loss, right? And I know everyone trades differently, but I was okay with putting a 0.5% risk on 1 tick of a stop loss. But as soon as I sold, I immediately went to go put buy limits in, right? So I went to go put buy limits, right, down here, and down here, and where my terminus was, which was actually the weekly volume imbalance, which was down here, right? And I mean, that's the first thing that I do is I go in and I try to put my buy limits in. Well, I was rushing, and when I went to go put my buy limits in, I accidentally bought at market. So what happened was when I sold 7 contracts right here, right, I went ahead and bought right there, right? Or actually, the first sell was right here, right? So I had a bad entry in the first place, and then I immediately, when I went to go set the buy limits, I accidentally bought back and lost, right? I meant to buy at a limit and put those limits down below price action. I accidentally bought at market, right? So that put me at a loss, right? So I'm going to even show you guys this. I'll show you where I'm talking about really quick, right? So that put me at a $262 loss, 0.25%. Now I only have another 0.25% to work with. So when that happened, I was out of the market. When price pushed back up into here, right, I then sold at another 7 with my stop literally at the same spot, risking a 0.25%, right? Price comes back down. I then added 2 more contracts and then took a partial at the first sell side liquidity at the 830 low. Okay, right? So I had a loss of a 0.25%, but then that first partial paid me almost a full %, right? That first partial. But then going back into it, right, I ended up getting stopped at break even right here, right? I took a partial, I moved it at break even, right? So this overall sell idea up here got stopped out at break even right here. Fine, right? I actually went ahead and I stepped away from the market, right? I took a partial, I made back that error and more. I was in profit. But what happened was I stepped away from my desk, went and did some things at work, had to go out into the factory, whatever, and I totally forgot that my buy limits were still in there, but I was not in the market. And with those buy limits acting as take partials, now we're actually physical buy limits. So as an hour went by, I went and checked the charts just to see where it was, totally forgot that I had buy limits in, and so all of a sudden, I had a buy limit right here because this would have been a take partial for me. And I had a buy limit. So it bought me in at 3 contracts right there where I was supposed to take partials, right? I also had another buy limit right here where I was supposed to take partials. So these two had bought me in. Now I was in a buy when I was supposed to have, they were supposed to be my take partials. But now I'm in a buy. The second I saw it, I did not wait for anything. I closed price right there, right? That's where you see this, right? This was my break even. This was that error in holding those buy limits were accidentally still in. Obviously took a loss. So I took 0.5% loss, right? So now I'm basically break even on the day, a little bit in profit. And even though I'm over trading, I still had a little bit of risk that I could still use. So as I go into the PM session, or I meant later into the AM session, a couple things I was noting. So really the main thing was we had a BISI right here, right? So I was using the inversion of this BISI, right? Price pushes up, and notice I was been talking about this over the past 2 weeks. The inversion of this BISI, and assuming that if we're going to continue order flow lower, we're going to respect the bottom half of that BISI, right? So price makes this. I enter in on this closure right here, right? So as price is coming back down, right? I'm viewing this as an order block. My stop goes at the high, right? So that's the order block. My stop is up here. I enter in right here, right? Price comes down, comes back up. I get a little bit of heat here, but notice the respect. Notice how sensitive this candle is to this BISI, right? The inverted BISI right here. And then we go lower, right? Where do I take profit? Well, I have 2 contracts, right? I only traded with 2 contracts here, right? I take my first profit at these relative equal lows, right? Right there. You can see me take 1 contract back. That's where you get this right here, right? The 20, or right here, excuse me, right? 0.5% right there. But that, if you can remember that this assignment, and I think this was assignment 6, the whole idea of the assignment was to hold to a higher time frame PD array. And this is a weekly volume imbalance that we had yet to fill a sell candle on. So I'm waiting for down closure candle. So where's my terminus? My terminus is the bottom of this volume imbalance. This is where my second contract was, right? That's where my terminus was. So I held from here to here. I paid myself 2 contracts, 1 here and 1 here, right? And that's, a 25, 28 handle move right here, right? Selling right here, taking a partial here, taking partial here. I did not affect my errors. I didn't allow them to get to me, and I didn't necessarily spiral. I waited for price to create a setup for me, and then I played to what I knew, right? I still took my partials, and then I held to my terminus, right? Showing you guys that I can hold, if need be, to a higher time frame PD array, right? So that was basically where my overall trade setup was wanting to go. Poor execution allowed me to kind of get caught up in here and get into entries that I didn't even want. I had no desire to be a buyer, but I left these buy limits open. I forgot to close them. So then that allowed me to incur loss that I didn't necessarily want or need. But I still was able to find a trade setup, and I was still able to hold, because no matter what, the thing that kept me in this game and the thing that allowed me to continue to trade was having the break even up here and closing my loss when I did down here, right? That allowed me to still have a little bit of risk to be able to take this later trade, right? So overall, I was able to, on that day, right? On that day, I was able to gain, let me see, 900 minus 200, that's a little over 0.5%, 0.75%. Now I'm back down to 0.25%. I was able to get a little over half of, I got like 2% on that, right? Going into this week's trade, right? So notice how after that, no other trades were taken until this trade, right? So if I go into a 5-minute, I go into a 5-minute, and I went over this trade a little bit. Shall go into a 15-minute. 1 hour. I forget that that breaker was on the 1 hour. All right, so this was this week's trade. And we wanted everyone to identify, right? Notice how, and this is the thing too. Notice how the week prior, very poor execution, right? Very sloppy. So going into this week, what was my main focus, right? To not make the same mistake again, right? When I enter and I set buy limits and all that stuff, everything should be clean, right? That's something that I can easily fix. It just requires a little bit more focus. And that's where you see going into this week's price action, right? A lot cleaner, right? One execution with 2 contracts, 1 take partial, 1 terminus, right? So going in, right? I think we already went into this, but we had a 1 hour breaker. 1 hour breaker. You have a high, a low. We take out the high and we take out the low with displacement. My favorite trade, right? My favorite trade. If you go into the 30-minute, you can see we had a inverted BISI, right? All these things are lining up, right? Going into a 5-minute, you can see how there's nothing I can take here besides just entering in right when it pushes up here. That's why I have to go in on a 1-minute and watch the candle closure in and around that level, right? So when I watch, we had jolt openings at 10, but I'm watching price action. And when price pushes up into not only this BISI, but this darker area that is the breaker, price pushes up into it and kind of keeps closure in and around that lower end of the breaker. And if I also take this BISI and I quarter it, right? This is the quarter of the BISI. I'm noting this also. I take the mean threshold of this up closure candle, expecting it to potentially be an order block. When price pushes back out, right? We've got a BISI right here. The price pushes up into it, comes down, taps into this. Now I'm looking and I'm seeing if price closes above or below the mean threshold of that up close candle. At 9:54, we push up into it, close below it, right? 9:55, we push up and then start trading back below. That's when I'm pressing the sell button right there. 2 contracts at 43.14 3/4. And my stop is right here, right? Risking 0.5%. My stop is up there, right? It gives me one little push up, very small, tiny heat. Not a whole lot of heat, not a whole lot of drawdown. And then touches that bottom half of that breaker one more time. Notice how it's the darker shaded area. And then just kind of oscillates a little bit, and then 10 o'clock hits and we displace, right? Where are my take partials? Well, 9 o'clock lows, right? Look at these relative equal lows right here. Sell side liquidity, right? I've got 2 contracts, so I've got 1 take partial and 1 terminus, right? That's my take partial. You can see right there, right? I bought 1 contract back at 42.92 and a half, and that's where you see this trade right here for about 1%. But then I held for the previous week's low. I want a 5-minute, 15-minute, right? This was previous month's low, previous week's low. That's where my terminus was, right? And obviously it gave me basically a pretty easy ride to it. But you can see right here, right there, right? And that's things that I gave you guys, right? Main draw on liquidity, 42.77 and a quarter. If I go in here and I go right here, I gotta find it. right? Sell side was at 42.77. My terminus was 42.77 and a quarter. And I told you guys, gun to my head, sell side, right? I tweeted this or posted this 2 hours before that sell side actually got hit. I even gave you guys right here, right? 42.77 sell side tagged. So those were my trades for this past week. And going into this week, I will start posting my my trades in the forum. But I wanted to talk you guys through really this this nastiness over here, right? Notice how this was nasty, way too many executions, failure on my part to be focused in the manner I needed to be. So my number one goal going into the following week was to have a lot cleaner executions, right? And don't make the same mistake twice. When I set buy limits, make sure I set them correctly and it's not on buy and it's not on a market execution. And if I do get stopped out, make sure to remove those buy limits, right? Unfortunately, I didn't get stopped out and I was able to actually have a good trade. But that was my trade this week, right? Using that 1 hour breaker, right? Just using this 1 hour breaker right here. And then on a 30-minute, the inverted BISI, meshing them together, but then understanding how to read the 1 minute when price delivers into it and how that candle closure acts and respects, right? That was able to give me an entry, knowing that I'm entering in a time frame, that 950 to 1010 macro, with volatility coming in at 10 o'clock, with clear sell side being the 9 o'clock relative equal lows, and the terminus of the previous week's low, right? Very clean, easy trade. Any questions there? Can we explain the short-term high, short-term low, intermediate term high, intermediate term low, lower? Yeah, we can. Yeah, we can go over that. And then, oh, okay, yeah, we already got that. Okay, Henry already got him on there. Well, yeah, we can still discuss it. Ismail, I know you have a question. You can answer. And I know you, Emmanuel asked, was the news high impact at 10? Yes, it was this impact news here. Hold on. This was the news event that I played, right? This right here, the job openings. Tuesday, October 3rd, 10 a.m. Ismail, I know you had a question. You're good to go.
For the trade that you took the previous week, the one that you held for the volume imbalance, the weekly volume imbalance.
Yep.
So I know you love the 1 minute, and I kind of like to watch the 1 minute a lot. Obviously, keep the higher time frame. When you're holding trades that long, how are you allowing retracements? Let's say like retracements on the 15-minute. How are you handling your trailing stop? Since you have like a longer target for most of the daily range.
Great question. Great question. So it has to do with a couple things, right? The first thing is paying myself, right? I was able to hold this trade relatively easy because when price takes out this low and I pay myself here, right? This entry goes to break even, right? Now, as price retraces back up into this area, I have to identify a very clear point where if price goes to that level, odds are it's going to go back above it. So the biggest thing was obviously paying myself, right? Disconnecting emotionally, knowing that I already got a piece out of the trade, keeping this at break even. But really, my eyes go here on a 1 minute, right? I was watching this BISI, and as price pushed even into here, right? I only moved my stop to here. right? This was the area in which I wanted to, because there's no arrays besides this civvy. There's nothing else really protecting me, right? We've got a couple bissies in here. So like you can note a couple of these bissies as inversion. But overall, it was this area in the market that I wanted to hold, right? There's nothing else above here that's really showing me that price could respect it, right? And so after seeing price react the way it did right here, I moved my stop right here and I just left it there, right? I already paid myself. I'm already going to make a little bit more even if I get stopped out. And so I sit on my hands. I literally just sit on my hands. I bump it out to a 5 minute and I just watch candle closure. So if I go back over here, right? And it's easier to say than to do, but I have those 1 minute levels on my chart. And now I'm just watching the 5 minute, right? I bump it out to the 5 minute and I'm just watching to see, right? There's nothing here on the 5 minute besides simply this, right? So even if you go on a 5 minute, right, we've got this BISI, right? And you want to see that be used as inversion. So either way, right, I would want my stop to be above the consequent encroachment of this. And this would be considered an order block, right? So I've got this bearish order block and this inverted BISI to kind of protect me. And from there, I'm just watching and I'm waiting and I'm watching and I'm waiting and I'm watching and I'm waiting. And I let price just go. Hopefully that makes sense. I mean, it's a lot easier said than done. But yes, when I'm holding those trades, I'm outlining what part of the trade could invalidate me. In this case, it was that 5 minute BISI, that 5 minute order block, and then I can start to put these areas on my chart too. Right? And I'm just basically understanding that, okay, these are all my areas. Out of all these areas, I'll even add this little tiny BISI too, because this is something that I was looking at. Out of all these areas, right? What's the least, how do I want to put this? What's the minimum threshold that I can keep my stop? Well, there's two areas, right? I could keep it, really, I don't want to put my stop anywhere below the consequent encroachment of the 5 minute BISI, right? I don't want to put anything below there because it still could come up into here, right? It could still come up into there. But then on a 1 minute, price gave me an actual swing point that was above it, right? So I put it right here, right? Because price technically could, if it wanted to, it could have came all the way back up into this area, filled this completely, and still go lower. So I can't put my stop loss anywhere below that area. So the safest thing for me and what was most comfortable for me at the time was to put it at this swing high, right? Because I'm still obviously in profit, but it's not just break even. And that's the thing, is when you're committing to these longer term trades, the only way you're able to hold and not be emotional is to pay yourself, right? I had already won the trade here, right? So now it's just understanding price enough to know if price is going to continue lower, where does that invalidate? And finding the nearest swing high, in this case, swing high, because we're expecting price to go lower. Where's the price in which price would invalidate price continuously going lower based on where my entry is? Is there a swing high in and around there? And then right there, it goes there. And then it just takes time with holding, right? It just takes time holding it. And it's a lot easier to hold it when I've already paid myself. I already won, right? I've already won. And that's something that I wanted to talk to you guys about today. And one of the biggest things I wanted to go over, there's two main things I wanted to go over. One of them is Mohawks, because I think that this Mohawks, the way he describes it and what you envision a Mohawk to be, I saw that get brought up in Twitter, is very good at understanding price action with regards to following it, right? And what a Mohawk is. But before I get into that, I actually want to talk about your model, right? Your model as a trader and your trading plan as a trader is really your business model. right? You are a business. You're a business. You are the business in this, right? And it's not a game of, oh, this looks really good. Oh, I think this is the one. No, you have to follow the business model. And every time you don't follow your business model, okay, well, how do I build a business model? Well, there's a couple things that you have to consider. Time, personality, what you see in the market, how you react. All of these factors have to go into this. And you have to understand yourself enough and have to follow price and see it enough to know what you see on a day-to-day basis and on a week-to-week basis. And my business plan, if I'm going to hold, and in my business plan, as a business entity that I am as a trader, my business plan states that if I'm going to hold a trade, 20 handles, 25 handles, 30 handles, 50 handles, if I'm going to do that, I have to pay myself first. I have to win a smaller, I can't hold for 50 handles without paying myself at 5 handles or 10 handles. I physically cannot do that. My business plan, it's not in the business plan. And if it's not in the business plan, I can't follow it. I can't do it. It's it's going against my rules. It's going against my morals as a trader, right? And I really do, like, you have to create your own morals, right? Because it's not just rules, right? Rules, people break rules, but people don't break morals, right? And I don't like to think of them as trading rules, because if it's a rule, odds are it's super easy to get broken. It's super easy to break. It takes one little it takes one thing going outside of your life, or one thing you might see that's super juicy in the market, or whatever the case is, to break that rule. I'm just going to trade one more time. Right? It's just a rule, right? I won't do it again. But if it's a moral and you break it, that sits in that mind. And then that gives you this self-conscious guilt that starts to spin. Damn. You know what? Even though I did win that trade, I wasn't supposed to go back in. It's against my morals. It's not who I am as a trader. That wasn't part of the business plan, right? And anyone knows businesses that fail, it's not because it's not hard to make a good business plan, right? It's not hard to put something on paper. And if it's on paper, and on paper it says that it's going to work and it's going to succeed, and you do it, it probably won't fail. The reason why businesses fail and the reason why these plans fail is because they steer away from it. On paper, it said if you did this, your outcome would be this. It doesn't mean you're always going to make money, but it means that if you lose, it's going to be this. If you win, it's going to be this. If you're going to hold, this is how you hold, and either way, you would have won the trade, right? If it's on paper and it's in front of you, odds are all of the outcomes are listed in front of your face, and those are the only possible outcomes that could happen if you follow the plan. If you follow the plan. If you do not follow the plan, there are infinite number of outcomes that could potentially unfold. And that's how you start to fall off. That's how you start to spiral. So it's following that, right? Don't think of this as like, okay, you know what? I'm going to make a trading plan. No, make a business plan. Get deeper than that, right? Treat yourself like a business. It's a business, right? You don't want to act like, oh yeah, this is a hobby. This is a skill set, whatever. It's not a hobby. Yes, it is a skill set, but it has to be used in such a formal setting that if you don't commit to the entire thing, create morals and a plan behind it, there's going to be a day in your trading career where you steer off of it, right? Look at Michael's son for an example. He was on the top step leaderboard. He had 12 straight winning days in a row. Started getting all this clout. He doesn't even have a Twitter, doesn't even have social media. Everyone's talking about him. Everyone's talking about his model, right? 12 straight days winning. It took one losing day, and that account was gone. He spiraled. He didn't stick to his plan. He didn't stick to his morals, right? So that's why you cannot treat your plan or your model based on results. You're going to lose in this. You're going to win in this. The outcomes do not affect any of it. I've said this time and time again. Your outcomes do not affect anything. Win or lose, it does not matter. You follow your plan. If your plan says stop, stop. If your plan says risk this, risk this. If your plan says wait for you to see this certain price action in this time, you wait for that thing. The number one thing I get asked is, Carson, how do I stop over trading? How do I stop over trading? You're answering it by asking it, right? You stop. The reason why you keep trading is because you're not morally attached to your plan. If you had morals, or if I were to tell you that your loved one was going to die if you actually continue to overtrade, you would stop overtrading. But you're just too caught up in it all, right? You're just too caught up in it all. The last thing that I wanted to basically say, and that's it for that rant. I know I'm going on a little bit of a rant, is Mohawks. Right? Mohawks. That was something that was people had not necessarily talked about yet. And when you're reading fair value gaps and closure and all that stuff, it's very, how do I want to put it? So like with regards to this inverted BISI right here, and this could be any fair value gap or any anything, honestly. No, that's not a good one. Hold on. Let me find one really quick. I can find one on 5 minutes. I'm going to take my executions off too. All right. So when you hear me constantly talking about closure, 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 closure. Even right here, here's a decent example. Right. So I'm just going to use this inverted BISI right here. This one might not be good. That one's not good. Hold on. I'm going to find one really quick. Let me find one. Let me find one. Let me find one. Okay, right here. Perfect example. Right? You have a SIBI. Right? You've got a SIBI. Price pushes up into that SIBI all the way through it. But you might say, Carson, it went right here, it traded above it. Does that invalidate it? No, it does not, because of the candle closure, right? It goes along the story of candle bodies tell the narrative, wicks do the damage, right? This is considered a mohawk, right? This wick that comes outside of this SIBI, but then closes back in, it's just a mohawk. It's just a stop point, right? It doesn't invalidate anything because you're watching candle body closure, right? With this specific time frame, with this specific SIBI, right? This is considered a mohawk. Price just came back. So when price does this, comes all the way up and closes back down, right? You understand that this wick is just a mohawk, right? Price closed back in it, which means this is still just as valid with it still being outside of it for a little bit, right? Because there was only a point in time where it traded outside of it and then came back down, right? Does that make sense with regards to how he's viewing and what that means when he's talking about mohawks? Same thing right here, right? Even though it outshoots it a little bit, all this is just a mohawk, right? Now you have to be a little bit gray with it, but yes, price still pulled all the way back up kind of near it. Same thing here, right? With regards to this SIBI, right? Mohawk. But there also is another SIBI right here. That's why it did that. But with regards to this SIBI, right? Mohawk just went outside of it, closed all the way back inside of it. It's still good. still good for use, right? And there's a lot of times where price is going to, if you have a BISI or a SIBI, right? Price is going to push up into, I'm going to make this one green. I'll make this one red, right? And we're going to say this is a SIBI. Right? You have a SIBI. Price fills the entire thing, but you've got a wick right here and a wick right here, right? This SIBI is still valid even though, let's say we're on a 5-minute time frame, right? This is a 5-minute. That's just showing you that on a 1-minute, price did have maybe candle closure above it, but on a 5-minute, it still remained inside this, right? So you're viewing these as mohawks, right? So it's key to note that when you're viewing or watching price deliver into a SIBI or a BISI, and maybe you are watching it on a 1-minute, and you see price deliver outside of it, it is so crucial to know that you need to go back into a higher time frame, 5-minute or 15-minute, and identify, well, is price actually inverting it, or is it actually inverting it or invalidating it, or is it just a mohawk, right? Oh, price pushed above it. Let me go out to a 5-minute really quick and see if it actually closes above or below it, right? In this case, it would have closed back in it. Okay, that's great, because what that does, and I actually love when price does this, because it gives me a great area to look for invalidation, because now I can now use this point as a potential stop, right? Price pushed all the way up, came back down, closed inside the BISI, or excuse me, SIBI. If this is truly going to be a mohawk, 9 times out of 10, this high is now important, right? So you can enter in anywhere on this candle and know that price should stay above this level, right? I'm going to see if there's any questions here really quick. Okay. Any questions on this? I wanted to cover this because I saw it on Twitter earlier this week, and I wanted to show this because it's something that it's an easy name, because if you identify like what a mohawk is, right? It's just it's a mohawk. I don't know a better way to explain it. It's a great way to explain it, because when you're dealing with SIBIs and BISIs, and when we go into this week's training exercise, you're going to be looking and actually understanding SIBIs and BISIs a little bit more. And this is something that's crucial within your learning, is identifying how, when we talk about closure, when I'm posting and I've got an area that I'm marking out and I'm saying closure in and or above, or in and or below, it's because I understand that price could mohawk, right? Price could go above it, but then come back and close inside of it. And that's crucial. Sometimes it's even beneficial, because what this is this is a stop hunt. And if this is a stop hunt, that means whatever's over here, right? There's a high over here. Price just ran these highs, but then closed back into the SIBI, which means order flow should still go to the downside, right? And you're entering in on this candle. Something to note as we go into this week. I'll stop jibber jabbering. Henry, do you want to share your screen, or do you want me to share your screen for the rest of the trading reviews?
Sorry, just one sec. Yeah, you can go ahead and jump
Okay.
into the reviews.
All right. So let's go into y'all's trades this week.
Mine's in there as well, which I can talk about, but we can do it after.
Am I sharing screen? Am I sharing the correct screen? Yeah.
Yeah, you're good. Just going
Okay.
to training
All
exercise.
right. Training exercises this week, right? This past week. This week is NFP protocol week. All trades must be closed by the end of the AM session on Wednesday. We want you to get comfortable with trying to identify setups earlier than later on the first week of the month. NFP price action is on the first Friday of every month and is good for study, but it's simply a gamble. Below are the details. This week, we want you to try it to identify a breaker block. This can be any time frame and fit around your model. Please write an outline for your trading model on your screenshot and or in your journal submission. Please make sure to include, if you are trading with a higher time frame bias, what time frame you are trading, the specific breaker block that you are identifying, and what you are targeting, whether it's internally or externally for liquidity and efficiencies, etc. Right? Keep the same balance you finished with after week 7, and it is up to you to calculate the lot size. You can trade up until the end of Wednesday on the AM session. You have 2 trades maximum for the week. Risk 0.5% if you're currently in profit. If you win your first trade, stop. If you go break even or lose your first trade, you can risk 0.25%. And if you are still currently in drawdown, if you win your first trade, stop. And if you go break even or lose your first trade, risk 0.25%. Target and hold for a specific 4-hour, 1-hour liquidity pool or inefficiency for at least 5 handles on ES. 10 pips on Forex, 20 handles on NQ. Partials are welcome. Moving to break even is welcome. No max stop loss, but you must maintain at least a 1-to-1 risk to reward, right? And then your journal. Alrighty, going in. IM trades. So this trade was taken on my phone at work, so I wasn't able to focus and manage this trade as I'd like to. Using the last macro of the New York PM session to trade back up into the 0.2 of the daily range. Waiting for the previous day's low to be swept, short-term shift in market structure. Went long on one contract and the breaker, and my stop is right below it. Targeting buy side below the 0.2 level. Solid setup, good entry, but as usual, didn't like my exit. So let's see. All right, right here, clear breaker, right? You've got a low, a high. We take out the low. We end up taking out the high, and he's waiting till price closes, right? He's waiting till price closes. Oh, I gotta switch
Not seeing the image.
Yeah, I gotta switch it. Hold on. All right. Low, high. We take out the low. He waits for price to close back above using this up closure as a breaker. He buys right here, right? And he looks at this implied fair value gap right here, using it obviously as inversion once it is, but he did go ahead and sell his contract here. Honestly, I think it's a great trade. Yes, you could have held for the buy side, but you went ahead and played the internal liquidity. And you also, if you noted right here, there is buy side right here, right? I think it's a great trade. You were able to follow the BISI right here. Entry's great, right? You waited for price to close above the breaker. It came back down. You entered it right where you needed to enter, right? Stop below the breaker, identifying that opposing liquidity has already been taken right here. When we take out that low of the breaker, I can see that you're watching price, identifying the tape read of it. You can note the price dipped down into this BISI, closed all the way back above it, delivers into it. And that's the thing. Over time, you'll get better, and you can hold if you want, but you only traded at one contract. So honestly, in reality, I like your exit better than what you think you wanted your exit to be. Because you had one contract on, so you couldn't have taken a partial. So it's better to actually play the internal liquidity. So I think that this is fine. I don't think you even needed this, right? I don't even think this was needed. Even though as a trader, as you continue to grow in your development, I think that's fine. But and even then, you understood how it inverted, right? This SIBI, once closed above, became support. What was resistance became support, and price traded in and through it, right? I think you exited it at the best optimal exit, but then you also you understood where you could have taken it, but you just tape rated it. You didn't need to make money off of it. I think this is a great trade. I think it's one of the best trades you've sent in.
I agree.
Let me go back to the next one. He also has this in here, right? And this is actually something that I want to show to you guys, right? Look at how he started his account.
You got to share the image, Carson.
Oh, my bad. Right? Look at how he started his account. 1, 2, 3, 4, 5, 6. 6 straight losses. Right? And then slowly, not all in one trade, but slowly building it up, right? Even taking another loss, not worrying about it, right? And then from there, right, now he's 1.5% in profit. This is a great example of it doesn't matter how you start, it's just understanding how you're going to get that back, right? You're not going to get it all back in one, right? He went down, let me look. He went down 0.5%, got it back within 2 trades, came break even, lost 0.25%, but then really found a trade setup that fit his model very good and was able to put himself in profit, took a minor loss, and then this week had a great trade, right? To really kind of put him in that, very clearly above water, right? And not only did he do that, but he stopped, right? He didn't overtrade, right? He clearly stopped. Great stuff. Next trade. 1 second. Fluorine. Henry, do you want to go over it, or do you want me to just keep knocking them out?
Just keep running.
Okay. Trade idea. Trade idea. He had a bearish breaker formed on a 30-minute time frame at 1 a.m. on Tuesday the 3rd. He's targeting sell-side liquidity with multiple wicks. On the 1 hour time frame, I waited for price to push up into the breaker and entered a short. Oh, so he basically, you had the same entry as I did. You had the same exact, so this was the same entry that I did. Emotions before, he was confident in the setup, probably entered just a bit early, but still good. During, well, this is the issue. When I'm in the trade, I often get emotional, which makes me take way too little profit or lots of break evens. After, I felt good for the profit, but still with a bit of frustration since I had a very good setup and only took 1/3 cut because of fear. That's something I'm trying to overcome and eventually will. All right, so if I come into here, right? You had the same exact trade I did, and I'm pretty sure this is the same trade. It might be, I think it's the same trade, yeah. So initial TP, and this is where you actually got out. So I think hopefully if you zoom in a little bit, you can start to see, yeah, okay, right? So
it's just NASDAQ instead of ES.
Oh, okay, that's what it is. Okay, so with this being said, and I'm going to ask you something, and you can respond in the comments or whatever. If you're on the call, feel free to hop in and chit chat with me about this. This is where, as a trader, you're going to go through this stuff, right? Why are you fearful, right? That's the biggest thing, is what is causing the fear? Is it the fear of being wrong? Is it the fear of losing money, right? What is this fear that you're enduring? Right? And I think that's where you start to answer the question, right? Well, what type of fear is it, right? Okay, well, I'm scared to lose. Why are you scared to lose? You're going to lose. You're going to lose, right? That's something that is, if you're scared to lose, that means if you're scared to lose, that might mean you might be risking too much. But here you're only entering at one contract. There should be no fear. You lose, you lose. You're going to lose a trade. I guarantee you, within the rest of your career, you're going to lose another 10 trades, 100 trades, whatever the case is. You're going to lose, right? You got to get that out, right? If you have a fear of being wrong, right? Why do you have a fear of being wrong? Okay. You're not a brain surgeon. No one's going to die if you're wrong, right? It's the story that you've got in your head. So the reason why you're probably taking out early is because you're afraid that you're not confident, right? You're not as confident in the setup, because if you're taking out early, you're not trusting that price is going to go to your level, or that your entry is not good enough. Trust that the things that you're being taught actually work. Start to trust it. Test yourself. Fight it. Dude, I don't know. It's getting it looks like it could come back, right? And even looking in your trade log, right? The proof is right in front of you. The data suggests that, yes, this is something that when I look at this, I can understand one thing and one thing only, right? You take out on your winners too early, and you hold your losses too long. And it's the whole paradox of hoping. You're trading on hope. But when you do get that glimmer of hope, right? when you do get that glimmer of hope, you don't trust it enough. And that leads to having these wins that are very small, right? Wins that are very small. But then when you're in loss, when you take a loss, you're so caught up and you're so you can't let go of it, because why can't you let go of the loss? Why can't you cut the loss short? Because you're scared to lose money. You're scared to be wrong, and you're hoping that price is going to go back in your favor. Right? And I think a lot of this correlates to you're too internally reflected on emotion, and you just need to pay a lot more attention to the charts. Right? If I'm looking at your trade right here, you understand price. You just might not understand yourself enough, right? You need to be a lot more confident. Like when I go into the markets, and this is what's tricky, when I go into the markets, it's this thing of like, my preparation is so in depth that when I come into the weeks, I'm not cocky, but I'm confident. I'm not nervous. I'm excited. But I'm not excited to where I'm all emotional. I'm excited because I'm confident. And it's you kind of have to carry this thing of like, this is my shit. This is my team. I run this, right? If I follow all my rules, I'm gonna get a good trade here and there, and this is my show. I run this shit, right? And you have to prove to yourself, right? Are you manually closing that trade? And this is another thing too. If you manually closed out this trade, and I'm going to look really quick at the comments because I don't know if you're in here or not.
Yeah, you can come on.
Yeah,
I see you with the hand raise.
I'd love to chit chat with you about this, because I think that there's a couple easy fixes in here. Because my first question is, did you manually close out of the trade? Yes, no, maybe so.
I think you should be able to unmute. Fine. Yeah, go ahead.
And it's okay if he doesn't want to come up here. That's perfectly fine. My main thing is, odds are if you ask, because it doesn't look like you had if you moved your stop too short, or if you, whatever the case is, but if you manually just closed out of the trade, right? You sold and then you manually just bought your contract back because you were fearful, right? There's something that you can do that is going to help you tremendously. And it is so easy, right? I never, ever, 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 ever manually get out of trades. You have utensils, you have tools as a trader that help you get in and out of trades, right? The only thing that gets me out of a trade is if price hits my take partial, or hits my take profit, or hits my stop loss. That's it. That is it. That is the only thing. I am never, ever, ever touching and interfering with the trade, right? I set my take profit here because there's a reason for it. I set my stop loss here because there's a reason for it. And I let the trade do what it does. And yes, if you're moving your stop loss a little too early and you're getting stopped out, that's something that you can fix too, right? You're keeping it a little too tight. You're trailing it a little too tight. But if you're manually executing to get out of that trade, you should never do that. You should always let the tools work for you. You put that stop loss in there because you have data to support that it's supposed to go there. And if it hits there, there's a reason it's supposed to take you out there. If you have a take partial or you have a take profit, it's there for a reason, and you need to let price do its thing. Hopefully a lot of that makes sense.
I want to give Florian a chance to speak to this he's on. I think it's just in your sound settings. If you click those three dots next to the end call button, the settings will pop up and you can change. You might have to change your input or something. Okay, try it. Okay. Yeah, no worries. We can give some time for it. I just want to say on this too, though, we're talking about trusting your model and trusting your analysis. Trust is something that is built through repetition and through a history of things working, right? And so you need to provide yourself proof in order to believe something. It's just like Michael says in the chart, don't believe in yourself, go in the charts and see it for yourself, right? This is the same thing when you're actually trading. You need to build proof for yourself that these things are working. And if you go down to my comment there, Carson, I left a comment on this because the way that you start to build that trust for your analysis is that you do it incrementally, right? Maybe you have concern that the trade isn't going to go all the way to your take profit, but you have to allow for that to happen in order to start working toward that, right? And so you start by taking your 5 handles or your 10 handles or whatever, and then watching the rest of the trade to where you expect it to go. Then from there, you go to taking a partial position, 90% of your trade off at your first target, and then, or, your 5 or 10 handles, and then you hold the very last piece of it until your terminus or break even. And you can slowly, incrementally change the amount of your trade that you're holding for it. So maybe instead of what I mentioned here is a great thing to do is switch to micros, right? If you're only allowing yourself to trade one mini, a great thing to do is switch to trading 10 micros instead, because now you've given yourself the opportunity to take 90% of your trade off and hold 1 micro to your terminus, which is a very small amount. Like, you're not going to be bothered if 1 micro comes back to break even on your trade, because you're already taking off the lion's portion. You already took 90% of the trade off. And so you can allow that to work. And when it goes and hits your terminus, you're going to say, oh, okay, so I did it right. My analysis was correct and I allowed it to play out. You're building that proof for yourself. That's going to help you in the future to hold a larger portion of your trade to that terminus. Yeah, so I just wanted to touch on that because it's hard. Like, willpower can only take you so far in any of this, right? You can't convince yourself to be confident or convince yourself to trust something without actually having proof of it working. And you have to build that proof for yourself by taking these incremental steps. I think you're here, Florian.
Yeah. Do you hear me now?
Hey, yeah, we got you.
Hey guys. I'm on the phone as well, and as well on the computer, but I think you can hear me. So yeah, I heard everything you said, and absolutely, you are very right. When you started explaining in the beginning, I mean, giving advice, I had this idea that I wanted to share, but I'm sharing now. I analyze not very well, but pretty accurate. All those trades that you can see them in the, those ones. All of them, I was in profit in all of them. But obviously I need more experience. Either I want more money, either I don't want to see red. So it's like, let me, I'm breaking this rule. I just have to take the loss, but I don't want to see the red there. So I'm waiting. Maybe it's coming back. So I close on break even to have it only on green, which is very stupid, obviously. It will never happen in this way. So that's why I have that big 900 something.
I got red, brother. I got red, brother. And even Henry, if he want, like, that's the thing here. I'll even come down here. We all got, I guarantee you there's nobody on this call that has been doing this or in this community that's been doing these training exercises that have red, right? I mean, Henry he started it in red. I mean, a lot of people have red. Everyone should have red, right? Red is part of it.
You're very right. Definitely. There is no excuse. I know.
You'll get it.
But the idea is that most of the time, and I say in the last months, because I'm trying to be very accurate, and most of the times I'm in green in the first seconds, and then when it goes back in red, and it happens, for example, in the last weeks when I did this exercises with you, I mean in the group, I waited. I didn't take any trade if it was not a very clear setup that I understand. And I always was in profit, and it went probably 20 handles on NASDAQ, but I said, no, this has to go more because of this and that, and I need to take more. And then it reversed in some of the cases. And then because of this fear that is not justified, but I'm just saying it, I move too soon at break even.
Okay.
Because, oh, it comes back. And, that's why you have a stop loss, in red, because it's a stop loss, But the moment I see myself in profit and I see the green goes nicely, I move, and I know I have to wait for the PDRAs to be, either respected or violated to move the stop loss. But I move it the moment I am at least, let's say, 10 or 15 handles on NASDAQ. And I move it at break even, saying, okay, from now on, I am still on green, if you know what I'm saying. But
Yeah.
many times the price comes back because it needs to, to
Breathe.
Or maybe hassle or give us hard time. But the price has to go in where it has to go. And that's the kind of frustration that I have, because I understand, not all the time, but many times I understand the setup. It makes sense now after listening to so many, strategies. I'm talking about ICT strategies, where ICT, PDRAs, and the combination of many of them. And it becomes clearer and clearer, and I love it. But it's something that, it's messing with my psychology in terms of like, oh, I've seen it. I can do it, and I don't want green. I don't want reds, and that's why I have those break evens. That's why I have that, 940, which is a stupid thing.
It's all right. It's all right. It's all learning. But I agree with Henry too, right? Like trust is not. Trust is built, right? And that was a key thing that Henry said. Like, and it's hard when you have like this one shot, one gun, one contract thing, right? And
that's also true. Right? Because
imagine how your confidence would have been if you would have taken out a partial, right? One micro where you did take out, but you left your stop loss where it should have been without moving it, and then let take another partial, but then let some of it ride. Because what's happening is when you're taking these partials, you don't really worry as much about the stop loss, right? That the idea of moving it and finagling with it doesn't resonate as hard if you're paying yourself. So that's something that I think could be an easy fix, but it just takes time. And this is something that you have to think about too, right? Like, we're doing all this in a simulated environment, but there's going to be a day where it's not simulated, right? And there's going to be a day where it's real money, and that's a real, that's what the red is, really red. It's a real red. It's real red, and it's real green, and that's something that you want to keep in the back of your mind, and just being okay with it, right? And I tell people all the time too, like, we're not in this business, we're not saving lives, right? No one's life is on the line. You're going to lose. I'm going to lose. Henry's going to lose. Everyone's going to lose. Everyone is going to lose. And you're going to have losing streaks and you're going to have winning streaks. And it's just understanding what I was ranting about earlier, right? Your business plan, right? Your business plan. Creating that very detailed business plan and understanding the morals that come behind it. And it's like, okay, I don't just move my stop loss and profit just because I see green. Right? In my business plan, I should have something that says, okay, what do I look for? What does price have to present, or what do I have to do to move my stop? Right? What are the things that have to happen? And then you just follow it, right? You just follow it. And like Henry said, over time, you start to trust it. Everyone goes through this phase, right? I went through this phase. Everyone goes through this phase where it's like green, stop loss. I didn't lose. Boom, done. I don't care if I win $1, and I don't. Sometimes it's like, it's whatever. Like, okay, if it doesn't just go from here, then I'll win a little bit, right? But and you go through it, right? Everyone should go through that phase. It's a phase that you go through, but you go through it to get through it, and I think you will.
Yeah, I just want to say one more thing before you move to the next trade. I appreciate very much, because doing these exercises with you guys, makes me be very serious about this account. I have another account on a different platform that I'm trading, but I not as before. But here I'm like, one trade per week. If it's a winner, just leave it there. If it's a loser, I mean it's a loss, then try another one for 25%. And this, it even though it's paper money, I'm stick to the rules that you guys provide in the practice exercise, and I like that.
Yeah.
And I'm trying to because it's about my mind. I have to educate myself to respect my own strategy that I put on paper or in my mind, or even the smaller rules.
Mhm.
Don't take another trade if you have a win. That's it, period.
Yep.
But when you see, you're like, oh yeah, this is an easy setup, let me take another one, just do this. I said to myself, let me stick to this until later, I don't know, and I can have more freedom to do it. But now I need to educate my mind to stick to the rules, and that's it.
Yeah, that's what it's there
Yeah,
for.
so
I'm glad.
yeah,
I'm glad you're
exactly.
getting benefit
Yeah,
out of it.
yeah. I get it. Thank you very much.
Not a problem. Not a problem. You'll get it.
Thanks for coming on.
Alrighty. Miss Katz, trade idea. I took this trade on Tuesday afternoon. After price sold off for about 2% on the day, I figured that we could be due for a return into the range and closing off the lows. Basically taking ICT's thank God it's Friday concept and applying it to daily closure. At around 15:30, price took a daily swing point and I started to reverse back up, respecting several discount P to raise along the way. I waited until we closed back above a 5-minute breaker and utilized the small volume imbalance inside the breaker as my entry, with stop loss below the breaker. Though my draw on liquidity was above the 15-minute buy-side liquidity, I exited at the top of the big SIBI formed at 15:05. Emotions before, I was calm. I missed the morning drop due to work, but I was sure I would be able to find another trade somewhere. Maybe a mean reversion trade into the range. During, calm and unemotional, I thought that the 1550 volatility injection could help move price. I had already had my stop loss and take profit set, so just waited to see whether I had the right read or not. After, happy with the trade overall. I could have held on for my draw on liquidity, but I already set the fill of the SIBI as my exit, so I just stuck to my plan and was content with enough. Great trade. I know you're coming off of a little bit of a hectic week last week, so I'm glad to see that you bounced back responsibly and did not let it get to your head. Quick little 2-minute trade. You love those quick little trades. One contract, 15-minute draw on liquidity up here, which you can see, right? She identifies the breaker, right? You have, it could be viewed as low, high, take out the low through the high, or you could have even one on a second time frame where you have a low, a high, you take out the low and it comes higher. Overall, it's just this up closure candle, right? She waits for price to close above it right here. She notes it. When price dips back above, she's entering in at the volume imbalance inside of it. Comes back up, closes outside of it, showing that bullish intent. Price dips down one more time, and then around the mean threshold of the breaker on the 5-minute. But then still clearly, obviously, gets that run higher, and her take profit was right here, right? You can see filling this SIBI, right? Which is perfectly fine, right? It's a very, 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 very low resistance liquidity run. She's coming off of a week where she had a little bit of a crazy week last week with over trading, couldn't really handle her emotions. So she's just going for the lowest resistance she could, giving her that feedback and that constant or that instant kind of gratification that yes, she still understands price action. Yes, she still can have a winning trade, and that stuff just continues to go. And so there's nothing wrong with this. Like I said before, it's your plan, right? And your plan of how you deal with coming off of a crazy week is different than how others do, right? You had a crazy week last week, and that's perfectly fine, and that's perfectly something that, as long as you're aware with it and you know how to go with it, you can understand that you don't have to aim for this, right? It does two in the same, just watching it play out for your trust and confidence as a trader, rather than having to make money off of it, right? So there's nothing wrong with this at all, right? Overall, you still had a great risk to reward. Overall, you're still in profit, right? And you were able to get back off of what you kind of closed with last week. And now you can kind of, what this trade to me did, looking at it face value, is it reset you emotionally, right? You didn't strive for too much. You didn't try to, whatever loss you had, you weren't worried about it. It was your executions. You overtraded a lot last week. And this week you came back and you had one simple trade, right? All this stuff feeds good things in the subconscious mind, right? And it just allows you to reset, go back to emotional equilibrium. And I think this is a great trade, right? You had a great time of day, power hour. Stop is all good. Everyone, it looks like, has been outlining breakers like they should. So I think that that's good.
Yeah.
Yeah, Henry even mentioned it right here. How she was able to use the power of 3 using that. Thank God it's Friday setup, but just on a daily example. So that's very smart. Looking at and understanding those higher time frames and how that daily is unfolding gives you that confidence that price is going to respect this breaker. Alrighty, Mr. Allen. Going into today's price action, I expected a retracement to happen as NASDAQ fell from a daily CIBI into a daily BISI yesterday. Using weakness in DXY reaffirmed my expectations. My emotions were non-existent making the plan, especially trading micros. I saw a 1 minute breaker block I liked, but I totally forgot I was watching NQ over MNQ. Originally, I did have a higher take profits for micros, but having opened full minis, I was unexpected and made me nervous. I made a new plan when I noticed overall my BP had a fun morning. I don't know what BP is. I'm unsure. Had a fun morning.
Blood pressure, I think.
Oh, my blood pressure had a fun morning, but glass half full. I was able to rethink and I was able to think fast and plan accordingly. I show green, but not too happy with this one. Regardless, on to the next one, right? So you can see that he was able to have a winning trade. He is back above water on the account. And yeah, so you can see right here, he uses the breaker. We have a low, a high, we take out the low, and then he's able to kind of see price consolidate in the breaker as price goes away. He was able to plan accordingly because he was in minis, not micros. So instead of holding his trade, he was able to at least understand that he played it a lot shorter than usual, which was perfectly okay, right? You're adapting to price and understanding that you kind of had a little mistake here, trading the wrong asset, which is just another thing is always constantly take 2 seconds to look, wait, what am I trading? Wait, how many contracts am I trading? Wait, am I actually hovered over the sell button if I'm supposed to sell? Am I actually hovered over the buy button after I'm buying, right? Am I actually pressing a limit? Am I actually pressing market? All those little things go hand in hand. But overall, good trade. I'll even read over Henry's comment. Well done this week. You did the right thing in recognizing the sizing mistake and adjusting your plan accordingly. Way to stay calm and collected on this one. You did a great job using the higher time frame to anticipate the retracement and then executing on the lower time frame breaker model. Excellent work. I like your stop placement and use of the new week opening gap as a framework. Looking forward to discussing more on Sunday. So yeah, I mean, overall, going into this week, whether breaker was your model or not, it looks like a lot of you guys are outlining breakers, and you guys are understanding that. And I think the key to these assignments are not always even just showing you the correct decisions to make, but we want to start to get you accustomed to not having everything be your model, but we want to get you guys to understand what everything looks like, right? The only thing that I could say is right here, you entered in and price, yes, traded through the breaker with a wick right here, but it would have been something that I want to see potentially later if we do another breaker assignment is to see price wait for it to close above it, right? There was a wick and price did kind of trade through it, but we didn't get closure above it. So if this candle right here would have been right here, right, and you entered in right here, would have been a little bit better. The reason why, if you notice, you entered in before the closure, even though price traded above it, you entered in before the closure and price came back into it and put you in a little bit of heat. Right? It almost stopped you out right here, but it didn't. That's because price hadn't fully closed. If you wait for that closure right here and price comes in, now you're entering here and you have a little bit less drawdown and it's a little bit easier on the mental game, right? That's the only thing that I would say I might tweak is wait for the candle closure rather than the wick. But other than that, it's a great trade, right? You adapted accordingly and you're back above water on the account. Mr. Henry, I'll go ahead and leave this for you.
Okay. Yeah, I'll open it up on mine. Okay, so I took my trades using a 5-minute breaker initially, right here. So we can see a high, a low, a higher high, and then moving through that low. So I'm drawing out the 5-minute breaker, but I'm not using this as an entry. I'm using it as a point of interest to identify where my setup's going to occur instead. And then I'm going down from there into a 30-second chart right here. So we're tapping up into the breaker right here, then dropping back below. Now we have a 30-second breaker that I can identify here. So I have a high, a low, higher high, moving back down to the low. So I'm dragging that out and seeing how price is trading in here. This is where I take my first entry. So this is actually 2 trades. We've got the breaker right there, closure below it right here, tapping right in there. So as soon as I see that happen, I'm getting in short. I'm putting my stop loss above the breaker. And then here, I had marked out this 2-minute BISI. Can't see it here on the 30-second chart, but on the 2-minute chart, you'll see a BISI right there. I'm taking my first partial as we trade into there. We're already getting into the last part of the day. So I'm a little bit more quick with the actions that I take as we get into the last hour of the day, because there's not a ton of time left, and I don't want to be stuck potentially holding a trade into the close. And so I'm ready to take my partials and get out of the trade where it makes sense. So I'm entering short right here. I have a little bit of drawdown, a little bit of a retracement, and then we're moving down into these equal lows right here and into this 2-minute BISI where I take my first partial. And then I went ahead and moved to my stop to break even after this first partial. And so I get stopped out right here, right where I entered. The reason I did that is because we've already come up and purged these highs right here. And then we're using this here again. So we went to the consequent or the mean threshold of the breaker, dropped down, took out sell side, hit the first partial, and we also tapped the low again right here. So now if we're trading back above this, since we've already used the mean threshold and we already tapped up on the bottom and then run into sell side, I'm thinking now if we trade back above this, this could potentially invalidate the idea and we could trade all the way back up in here again. So while I could have held this if I had a little bit of a wider stop and kept it above here, I was fine looking for a second entry to see if this would play out again. And so I'm actually given the same setup again on a 30-second chart. So we're running back up in here, tapping the low of the 5-minute breaker.
Henry, mention those mohawks right there. Up.
In here?
No, right there. Yeah, look at that. That's a mohawk.
Yeah.
Price,
so
yeah.
Here, if you look at this, there's a small SIBI right here as well. If you take that across, you can see how the bodies stay inside of the SIBI, and it's just wicking up here, tapping that low with a 5-minute breaker one more time. So if you are entering your trade off of this SIBI right here, then you would need your stop loss above this candle right here to allow for a potential wick or mohawk to trade into there. But anyway, I take my stop out right there. That's fine. I was able to secure a partial on that. And then I'm allowing myself one more trade since I got a partial on the first one. So we're running back above the high, just tapping the breaker, and I see how quickly this moves back off of it. And so while I did get stopped out break even on the last trade, the general idea of expecting sell side to trade down here has not been invalidated for me. Just this specific trade, but not the overall idea. So as we run back up into here, drop back down, now I have a high, a low, higher high, and the low again. So this is going to be my breaker, last down close candle. I'm dragging that out, and we have closure right there, and then I enter on the return into it. I'm putting my stop up here at the high of this SIBI rather than just above the breaker itself, because I'm allowing a couple PD arrays to potentially hold price lower, right? I have the breaker, I have this wick here, I have this high wick here, which you can look at the consequent encroachment of that, and then I have the CIBI itself. So I have the low, I have the midpoint of the CIBI, and then the high. So if this trades all the way back up to the high, that can potentially invalidate my DA. So I'm putting the stop there. But since this CIBI is inside of this breaker as well, I want to allow for that to trade just a little bit into there. So I'm fine trading it up into there, but not into here. So that's where my stop goes, right there at the high. Okay. And then it drops down. I'm noting these lows. I'm taking partials under them. And then I'm taking a partial at sell side right here. And then at that point, my stop goes to break even after taking those partials. And I'm stopped out right here. This is the one point where I could potentially have done a little bit better on this trade. And that is, if you give yourself the opportunity to take more partials off and take the majority of your position off, then you can actually focus even less on moving the stop, right? So if I was trade, I've had 12 micros on this, could risk 0.25% on the account. And so if I had already taken 11 off down here, then I would be fine leaving my stop loss where it was placed originally and not even moving it to break even. And then I can allow the return up into this breaker to continue work and trade down into my terminus, right? So I didn't have the opportunity to participate on this because I moved my stop to break even so soon. But ultimately, I did the right things here, took my partials here, took partials here, and then I was able to stop out in the black on this trade. So slowly working to recover. I didn't participate in the previous 2 weeks of trading, so I have a bit of a gap in my trades here from September 14th until October 3rd. But as I shared in the last 8 weeks of doing this, my account started in drawdown, several losing trades in a row. And we talked about giving a larger time frame in which to recover that drawdown, right? I'm not trying to get it all back right away. I'm working at it slowly. I'm taking little pieces and little bites out of the drawdown and then working out of it over a larger time frame. It doesn't put any pressure on myself, and I'm able to just focus on taking the right good trades and doing the right things and then slowly working out of it. And so now the account's only down like $120. So one trade, one partial will cover that on another winning trade. So that's it from mine. If there's any other questions,
you want to go over this week's?
So okay, this week's, if you go to the community forum on the website, I think everyone here probably has an account at this point, but if not, go to firsthandtrading.com. Go when you get to the website, you'll see the start now buttons. Click those, make an account, and when you do, you'll have access to the members page. And then you can go to community forum and training exercises. And this is where you'll find all the exercises. This is where you'll find the actual assignment and do your submissions as well. So this was last week's exercise 8, and you can go in there and see the submissions from this past week. And then if you go into exercise 9, that'll be for this coming week. We do have a market holiday on Monday, so there won't be any trading on Monday. I think the markets may be open, but it's really not great to trade on those days because it's just reduced volume, and you're not going to have a lot of volatility to work with on Monday. But here's exercise 9. So this week we want you to work on identifying the ICT silver bullet setup. Here are the criteria. So you'll enter inside one of these time windows, right? 3 to 4 a.m., 10 to 11 a.m., 2 to 3 p.m., all in Eastern New York time. Enter inside one of those time windows using a fair value gap and targeting the next likely draw on liquidity. So it's going to be an old high or an old low, or an inefficiency, like a fair value gap or avoiding the balance. Right? Please outline the setup on your screenshot or in your journal submission. Make sure to include, if you're trading with a higher time frame bias, what time frame you are trading and what you are targeting. Account balance remains the same as after week 8, and it's up to you to calculate your lot size. The goals here, trade in the silver bullet time windows, Tuesday through Friday, right? So no trading on Monday, and just do not trade ahead of or into red folder news. So you don't want to be holding into FOMC minutes. You don't want to be holding into the CPI release, okay? 2 trades max for the week. If you're currently in profit, you can risk 0.5% on your first trade. If you win it, then stop for the week. If you go break even or lose the first trade, you can take one more at 0.25% risk. If you're in drawdown right now, then just risk 0.25%. If you win it for the week, you'll stop there. And if you go break even or lose, you can risk another 0.25%. Target and hold for specific 4-hour or 1-hour liquidity pool. And these are where you want to be ideally taking your first partials, right? So 5 handles on ES, 20 handles on NASDAQ, 10 bips if you're trading a Forex pair, all right? As always, partials welcome. Move to break even is welcome. Just show, if you move to break even, show on your journal where you are making the decision to move to break even. So that's something we can review. And then always use a stop loss. Okay. Here's the specifications for what to include in your journal. And then after you complete the task, just have your screenshot and your journal, and you can write it as a comment right here. Put in your text, click the add an image button, and you can add your screenshot in there, and then just publish it. And we will review those on next week's call. Any questions on this task? I'll note too that with the silver bullet idea, the fair value gap that you are trading does not have to form inside of these time windows. It just needs to be traded into during this time window. So you could have a fair value gap that forms at 9:30, and it's utilized after 10 a.m. between 10 and 11 a.m. That would qualify as the silver bullet. Any questions? Good. Everyone understand?
Alrighty. Well, this is time for anyone who wants us to go over anything. Let us know. Look at anything. We're 1 week into having the full community. I want to thank everyone who is just continuously participating. All the love, support, feedback helps. Any like, post, retweet, comment, everything, follow, all of it helps. All of it helps. It encourages us to continue to grow and be better and get this platform to a point where there's nothing better than it. But other than that, I don't really have anything on my end. Obviously, here to answer any questions outside the market for you guys. Anything that you guys might want. Yes, you can DM me on the forum after the call for sure. Would love to see what questions you might have. I always have that open. But yeah, for the most part, just trade safe this week. We do have CPI. Please do not trade it CPI. But if there's anything that might come to the top of your head, me and Henry are working out potentially one-on-ones in the near future. If there's times where you guys want to sit down with just myself or my Henry, or if you would like both of us, a big thing for me is understanding what you guys are going through in life, right? The good things and the bad things. As a peer and as someone who's trying to help you and better you, it helps us understand you. So help us help you. And, if it's not something you want to do on a group setting, but if you want to do one-on-ones or whatever the case is, it's going to help us understand you better, right? What are you going through? What are the things that might be going on in your life that we don't know that's affecting your trading inside, right? And, we've all been through certain things. And, this isn't just a platform, it really is a community, and the better we can understand you guys individually, the better we can help you and understand you and resonate with the things that you kind of put into the marketplace. Other than that, just thank you for the support. We're going to keep working on stuff on the back end. Another thing I would add is please, if you haven't already, we're having some issues with our emails going into spam. So that team at First Hand Trading, try to, look in your spam and see if that is there, and add that to your contact list as an email so the emails don't go to spam anymore. We want to utilize that, but we don't think that it's reaching enough people because it's going into spam. But if you do add that to your contacts, it won't
Or
go to
find
spam.
the email in your spam inbox
Yeah.
and move it to your normal inbox, and then future
Yes.
emails you should receive. Yeah.
Yep. So that's something that we're going to continuously kind of communicate if you haven't already. That's probably one of the biggest issues we're dealing with right now, and we are trying to fix that as best as we can. Other than that, I think that's it. I think that's it for me. Henry, you got anything else?
That's it for me. Thanks, Emmanuel. I'm glad to hear that. I'm glad to see everyone finding value in these, and it's awesome to see everyone show up every week. I love seeing all your posts in the forum and in firsthand social too. I'm glad everyone is enjoying the site so far and taking the opportunity to share what you're learning. So it's an opportunity for everyone to grow, right?
Yeah.
So.
No, you're good. Sorry, I didn't mean to interrupt.
Go ahead. Go ahead.
So usually what I'm going to start doing is on Sunday nights, I'm going to post a weekly and daily. I'm not going to do monthly as much, but weekly and daily every Sunday night on DXY. And then I wait for Monday. And after Monday's closure on Monday nights, I'll post ES and NASDAQ. And then if I can, on Fridays, I'll try to post an update on how the week closed too. But just keep that note. I'm going to be posting on Monday or on Sunday nights. I'll post my DX analysis for the week, weekly and daily. And then on Monday nights, I'll post ES and NASDAQ. I do like to have that Monday closure before I send out my analysis, but keep that in the back of your mind. That's when I'll kind of be sending out those analysis on that. And then I will let you guys know probably the night before on the days that I'm going to be posting and kind of pointing at the market before the fact. If you guys can catch that post, I do encourage you, if you are trading ES, to follow me on those posts. Follow my page or follow whatever the case is so you can get that notification, because there's going to be a morning or two each week where I'm posting levels, and I'm going to tell you always, gun to my head, whether I'm right or wrong, where I'm looking for liquidity, and I'm going to try to outline as much as I can and show you what I'm looking at before it happens. So please keep that eye out, right? If I post on Wednesday night and I say, hey, tomorrow morning I'm going to be posting live updates before the fact, make sure that if you are trading that session or in the morning and you want to follow me, just have firsthand social on your side so you can constantly refresh or have that notification on standby, because I think that you'll get a lot of learning out like that. It's exactly what Michael does on Twitter. I'm going to be pointing at levels. I'm going to be identifying specific candles, and I'm going to be giving you my gun-to-head analysis on whether buy side or sell side gets taken. So that's something that can benefit you, right? I'm not expecting you to trade it. I'm not expecting you to take trades off of it. But if you're sitting there and you're trying to learn what I look at 30 minutes or an hour before it happens, that's going to really help you and understand where to study, right? Where am I looking at, right? Because that should be potentially where you might want to look at too. Other than that, all good. Happy Sunday. Enjoy the rest of your Sunday wherever you are. And we will talk to you Wednesday. Thank you.
All right. See you all then.